by former Ambassador Manjeev Singh Puri, highlights how the Reserve Bank of India's latest steps to internationalize the Indian rupee could bring new momentum to India-Nepal relations. On the 1st of October 2025, RBI Governor Sanjay Malhotra announced 3 key measures. First, authorized dealer banks in India can now lend Indian rupees to non-residents from Nepal, Bhutan and Sri Lanka for cross-border trade. Second, foreign banks can use their special rupee vostro accounts to invest in Indian corporate bonds and commercial papers, in addition to government securities. And third, the RBI will now establish a transparent reference rate for major trading partner currencies to make rupee-based transactions smoother. For decades, the exchange rate between the Indian rupee and the Nepalese rupee has been pegged at 1.6, a stability that has protected Nepal's currency from depreciation. Allowing Indian banks to lend in rupees will help Nepalese industries which have long faced challenges in getting working capital and credit from domestic banks. Nepal's economy, after a brief recovery from the COVID-19 lockdown, slipped again due to weak industrial performance and tight lending policies. Most Nepalese banks, controlled by large industrial houses, were hesitant to lend, leaving small businesses struggling. This created a chain reaction: weak supply chains, low demand, and high unemployment, which even affected Nepal's political stability. In this context, India's move to allow rupee lending can act as a lifeline. It can make trade with India smoother, help small businesses grow, and attract new joint ventures. The US has already announced a low 10% tariff for Nepal, which means Nepal can use Indian rupee financing to import raw materials at value and export globally. Currently, India accounts for 65% of Nepal's total trade. Indian firms represent 1/3 of Nepal's total foreign direct investment. India exports goods worth $8 billion to Nepal and imports about $1 billion, mainly in edible oils, tea, coffee and jute. The RBI's measures could make the Indian rupee preferred currency for bilateral trade, reducing Nepal's dependence on the dollar. This will also help stabilize Nepal's forex reserves, lower current account pressures and improve overall economic resilience. However, for this initiative to succeed, the Nepal Rashtra Bank must interpret the RBI's policy carefully and create matching frameworks for regulation, compliance and borrower eligibility. The editorial concludes that these steps can reset and reboot India-Nepal economic ties, building a more equal and cooperative foundation for the future. The RBI's prudence, coupled with Nepal's proactive participation, could bring both nations closer to a level playing field, strengthening South Asia's regional economic integration. For UPSC aspirants, this editorial links to topics like India's neighborhood policy, internationalization of the rupee and regional economic diplomacy, crucial for GS Paper 2 and 3.